You know those days when you look at the stock market and just scratch your head? It's like, what is going on here? Well, that's exactly what happened in the US market last night. It was sending some seriously mixed signals, and today we're going to unpack it all.
So when you look at the final numbers, you have to ask, right? Was this a good day for stocks or a bad one?
Well, weirdly enough, the answer was kind of both. Yeah, the market was totally split down the middle, telling two completely different stories at the exact same time. It's a real puzzle, and we're going to dive right in.
Okay, so here's our game plan. We'll start with the big picture, the split between the major indices. Then we'll zoom right into the tech sector, because there was a whole battle raging in there. After that, we'll check out the key data that could tip the scales, see how this whole thing is playing out in Korea, and wrap it all up with the big theme of the day: hype versus cold, hard numbers.
All right, first up, this whole split personality thing started at the very top. I'm talking about the biggest US indices, the Dow and the NASDAQ. They basically told two completely different stories yesterday.
So, check this out. You had two totally different things driving the market. On one hand, the Dow Jones, the home of all those classic old-school industrial companies, it actually had a great day. It was up because there was some good news out of Washington about maybe, just maybe, avoiding a government shutdown. But then you look at the tech-heavy NASDAQ, and it went down. Why? Well, people are starting to get a little jittery about a possible AI bubble and just how much all this new tech is going to cost.
And this chart just lays it all out perfectly. Look at the Dow. That bar is solidly in the green. A good day for the old guard. But then the NASDAQ just dipped into the red. It's like a perfect snapshot of a market that can't make up its mind.
Okay, but here's where it gets even crazier. We're going to zoom in on tech now. Because even inside the NASDAQ, which remember was down for the day, there was this massive internal tug-of-war going on.
So, in one corner, you had the heavyweights, and they were getting bruised. We're talking Meta, Tesla, Amazon, Alphabet, all of them were down. And the big worry? Investors are looking at the billions, literally billions of dollars these guys are spending on AI, and they're starting to ask, hey, is this actually going to be worth it?
But while all those giants were stumbling, one tech company just exploded. It completely bucked the trend. I'm talking about the chip maker AMD, which shot up an incredible 9%. Just amazing.
So you've got to be asking, what gives? Why the massive difference? Well, it's pretty simple. AMD didn't just talk a big game about AI. They came out with what we call strong guidance. Basically, they gave a super confident, concrete forecast for how much money they expect to make. In a market full of hype and promises, AMD showed up with actual numbers. And that confidence was so contagious, it actually pulled the entire semiconductor index up along with it.
So all of this leaves the market kind of stuck, in this tense standoff. The big question is, what's going to be the tiebreaker? Well, everyone is holding their breath for a bunch of huge economic reports that are coming out this week. And man, is it a packed schedule. We've got the big one tonight, the CPI inflation report, plus the weekly jobless claims. Then there's a huge treasury auction that's going to tell us a lot about interest rates. And as if that's not enough, we've got earnings from giants like Applied Materials and Disney. Seriously, any one of these things could be the spark that finally gives the market a clear direction.
Okay, so let's shift gears a bit. How is all this back and forth in the US affecting things elsewhere? Let's take a look at how this is shaping trading strategies all the way over in the Korean market.
Well, it turns out the Korean market is dealing with the exact same mixed bag. You've got some good stuff happening, strong buying from big institutions, a hunt for cheap, undervalued stocks, but that's bumping right up against the bad stuff, like those US AI stocks falling, and of course, worries about interest rates. The end result? You've got a market that's not really bullish, but it's not really bearish either. It's just stuck in the middle.
And that kind of environment leads to a very specific strategy. It's called rotational trading. Forget about those days when a rising tide lifts all boats. That's not what's happening. Instead, investors are being really picky. They're moving their money around, rotating from one sector to another. They're playing sniper, hunting for specific opportunities. So they might sell off some of their semiconductor stocks and move that money into something that looks undervalued, like shipbuilding. It's not about betting on the whole market anymore, it's about picking your spots.
Okay, so we've looked at all this craziness, the Dow versus the NASDAQ, the action in Seoul. After all that, what's the one big lesson here? What's the real takeaway?
Well, this one-liner from Rorosha's analysis just nails it. It says to expect a differentiated rotational market. What that really means is Don't expect everything to move up or down together. The market is being super selective right now. It's picking winners and losers, and it's all about the specifics.
And that right there brings us to the most important point of all. When a market gets really hot and excited about a huge new idea like AI, there comes a point when the hype just isn't enough anymore. Sooner or later, investors stop listening to the big stories, and they start demanding to see the hard numbers, real, concrete results and solid forecasts. Like what AMD just delivered, that's what wins in the end. So I'll leave you with this question. In this mixed-up market we're in, where are you looking for the hard numbers?